And that's going to change the game, guys. That's why I was trading a lower share size, a lower price stock today. I didn't do very well with it early on, but we made our money back. But everything's going to change. So I've talked to the $1 Million Margin Club, who writes strategy books. Like, please make a strategy book that's going to encompass the new lower PDT for people that can really grow their account with much smaller amounts of money. I think that the RV strategy from Day Trading Volume 1 can be used for the most part, but I'm going to be back testing to see if the same fib levels, same support and resistance levels based on historical data, if they actually work on stocks that are ranging from like $10 to $50 or $10 to $75, where you can, if you only have $2,000 in your account, you can margin up to $8,000, or if you have $5,000, you can margin up to $20,000. $5,000 would be enough to make you a living with the right strategy. That's all you need. Then you just add money to your account and you can go higher and higher in share size. Obviously, you want to trade in a simulator. I'm not a licensed financial advisor. Remember that. Seek the advice of someone licensed. Let me get this message down here before you follow anything I say here. Okay, so remember that, guys. All right, so we're good for the day with Charlie. She's made her 150. I was just looking to see if there was anything else I could do before I jump to the higher share size, but all right, she's good to go. She wants to stop now. All right, so guys, thanks for watching. This will be the recap of the stream. I'll give you an update about how we're doing on the account. If you didn't catch my stream earlier, I haven't been on live streaming. I've still been kind of trading due to some, bad news and stuff that's been going on here regarding my personal life is kind of snafu'd in my schedule and changed when I might trade and not being very verbal about my trades, not calling them, just going in and trading. When you're not in a good mood, it's hard to be exuberant about calling trades for everybody. So that's pretty much the gist of it, but I will go into more detail as time goes on about what actually happened. But it's not really about my trading, but it does involve it in a way. And anyway, and then we have all these plans for next year that we're going to be gearing up to doing things a bit differently to expose people to better ways to make a living, that they can make a living easier. The PDT being changed, hopefully it'll be completely figured out by the first of the year, is going to change. It's a whole new world. That's why I was saying the $1 Million Margin Club needs to do a new strategy book based on that. Stocks that are cheaper, not large caps. So, all right, guys, thanks for watching. Be careful out there and go green, and I'll see you soon. Don't forget, check for me live every morning. I might not be as consistent, but just put your alerts on, and you can see if you want to trade along live with me. Hey, everyone, this is Professor with Day Trading for Success. Stick around. I've got an exciting video to show you about how we're doing in our challenge this month. I'll be right back. So welcome back, everybody. This is the Professor again with Day Trading for Success. So I've got open here Trader View. This is where I report to from Charles Schwab and Thinkorswim. Every day, every morning, we bring back over the trades that we traded, and I'll show you on the actual platform as well. So right now, we're just showing how to scalp. I trade live every single morning. You can come over and trade along with me. There is no membership fee. There's nothing. I don't ask for your email, nothing. Just come over and watch and root for me, and hopefully root for yourself. Obviously, I'm not a licensed financial advisor, so you should seek the advice of someone licensed before you try to emulate me. Trading is risky, so be careful. Trade in a simulator, and only with money you can afford to lose. Anyway, today, this month, we started out wanting to make probably $150 a day. We had some of the staff trading with us. I'm trading in the studio here, and today was a pretty good day. We did over 300, as you can see here. Labor Day was off, so we have 7 days of trading so far, and we're averaging $207 a day. So about $50 more than what is my minimum that I go for each day. So it looks like this is going to be over $1,000 this week. So if you just compute that, if you're trading 20 days and you're making $200 a day, you're making $4,000 a month towards your expenses with only trading about an hour a day on a very, very conservative trading. It's very, unless you just don't get out, you don't pay attention to your max loss. And I put out rules all the time on what to do. You should make your own, but this is basically how I trade. Now, this comes from a swing trading mentality. All right, but following these steps, the one that is outside the norm of what you would normally hear is that you would add to your position. And I learned that from swing trading way back when, where you're waiting to get in at a certain dip, and sometimes it looks like it's not going to get there, so you're like, well, I'm going to get in some of my position in now above the dip, and then I'll scale in the full position as it hits it, and then I have a max loss down there if it keeps going against me. But for the most part, you're getting your max position in that case would be the floor, like where you intended to enter all the shares at once, but you're afraid it might turn around and go the other way, assuming you're trading long here. And that's why swing traders will scale into the position. They'll also scale out as they go out. In this case, the way that I scalp, which is a little bit different, I put far much risk in my scalping. I only go in 25% of my position. In 80 to 85% of my trades never even exceed that. They just stay there, and then I get out real quick and make some money. Some money is better than no money. I'm not going for big money. Scalping, you're in and out. It's the fastest way to day trade. You're in and out in just a few seconds, maybe a minute. You could get stuck and you wait, but I just get in and out. I don't get greedy. $10, $20 a trade, and then you trade 10, 20 times, and you've got a lot of money in less than an hour, and you've never really risked too much to do that. Not saying that I haven't lost trades. I certainly do. But my average runs, I think this month it's a little bit below 90. We'll go over that in a minute. 90%, which if you talk to most scalpers, that's unheard of, that type of accuracy. It's not me, though. What it is that basically following support and resistance historical data, and then watching the price flow by using indicators to do that. That's how I trade. You might want to trade differently. But back to this, if the price is going against it, like you get in and it's going down instead of up, if you're going long, right, and it keeps going down, you don't want to just add to your position so you get a better price point. No, absolutely not. That would be the wrong way to do it. But if it's going down and then it shows signs that it's going to reverse back to your position, or even maybe further, it's gone down and now it's going back up, right, on your chart. When you see definitively that it's going up, if there's such a thing, right? It's just probabilities, guys. That's all we have here is what's the probability here. But then you add as it goes up, and you've made a better price. You're not getting the best price because you didn't get it at the bottom. You waited for it to turn around and show signs of full recovery. Then it's like, hey, why not go in for a higher share size? You can get out quicker, or you can make more money. But all these other things are really things that any trader should follow, log every day. If your hands are shaking, you need to lower your share size. If you're sweating, if you're nervous, if you can't hold into the move that you predicted, because you're making a day trading plan, remember. And if you can't, every trade is its own mini plan. You should see, like, here's where I want to get in, here's where I want to get out, here's my maximum loss. So you have lots and lots of videos on that. But if you can't wait for that, that means your share size is too high. That means you're too afraid, and that you can't trade if you're trading completely out of fear, right? You want to trade out of confidence. So anyway, you should make your own rules to follow, but this is, other than the add to your position, these are pretty good rules for anybody to follow going along. And I'll just flash this up while I'm here. Remember, I am not a licensed financial advisor, guys, so please read that and be careful with real money. A lot of people just go in with one share size, just one share size until they get, or they trade in the simulator, right? Today we had a pretty good mover, and let me go into the monitor here. So here's the stocks that I traded today: CoreWeave, Hood, Robinhood, and then Oracle, right? I came back on after the stream and did a few more bucks on Oracle. Got us up to I think it was at 218 when I stopped. This was just a couple of trades more, and I got it up here. So that worked out pretty well there. Let me go back to let me see if I can, I think I clicked off before I showed the accuracy. So let me get this tab reopened over here. and we can get into the accuracy of, because I never looked at that. So here was the month we were open right there. And then now let me go into the report so you can see how I've traded for this month. So here's my accuracy trade. So only 80% today, 92% yesterday, 76% back there, 90% there, 73% there, 80% here, and 90. So if I did a quick assessment here, I'm only running at about 82 to 84% on an average over those days. So that's down for me. Normally I'm higher. I have been getting out more often than I normally would so that it's easier for people to follow around with me, like take the losses much lower than I normally would, or I would hold into them and might make them a swing trade, or I would add more to my position. What I've done here is I've opened an account that is the size that everybody should be able to trade if they've made the PDT rule, and I never go higher than that 4 times margin. So anybody who's trading this way, who's scalping and can do as many scalps as they want in a day, should be able to follow along with this. Again, I don't recommend that you follow along. I recommend you follow along to learn, but not adopt every single of my trades. You need to really see it for yourself and go in and go out. I know most people don't, though. They just follow along exactly. Remember, there is a delay on the stream, so remember, that's why I try to call out the levels I'm looking at, because I know what you're going to do, but I cannot take responsibility for your trades. I am wrong. But often, so you have to, I can't take on the responsibility of you and me, and I really worry about you. I want you guys to make money, so that to me it's more important than making a few bucks, as most of you know that follow along. I am a large share size trader. I trade thousands of shares with other groups. So doing it on a smaller account like this, it may seem big to you to trade 50 shares or 100 shares, but really that's pretty standard as you start to feel that your confidence and, adding $2, $4, $6, $8,000 a month is not that hard to do. Once you get into it, it's just not that hard to trade with that kind of accuracy. We can kind of look back. Let me go to say, I think some of these still have my original, these still have the original levels. Let's take a look at Robinhood that I traded this morning. I think I just took 1 trade, maybe 2 trades. I set the breakout levels here. That's what that is, based on Day Trading Volume 4, which is the book that has you trade the open with 4 different breakouts. And what I mean by that, a lot of traders will wait for the candlesticks to form at the end of the first 5 minutes. You'll have a 5-minute candlestick high and low, and if it breaks out the high or breaks out the low, then you normally would jump in that direction, short or long. Not, you want to look at other things, but that's a breakout level. Like, hey, it's breaking out. Get in, go for it. And they do it for the 15-minute as well. So the book covers 4 of the main breakout levels. So I recommend you get that book. I have a link to it. But most of the historical data is based on Day Trading Volume 1 or the theories behind, trading in the zone or best loser wins. I mean, I have links to all those books. If you're interested, it helps me out if you buy them through my links, but just get them wherever you get them and read them, and it will help you become a better trader. I like the $1 Million Margin Club books because they have strategies, and then they also have that Day Trading Volume 2, the Candlestick Pattern Playbook, which is the only book that rates the accuracy of the patterns. So you have a couple different things to think about, and I talk about this a lot. You have the overall patterns, right? And you go back multiple days to see those, right? The overall patterns, what's happening here. And if you were to mark historical data, there's an example of historical data. Where did the stock come up and abruptly turn around, right? Right there, right? That level. This was the close of a different day, so this is kind of not helpful at all. And then here, this was an intraday level that I set, right? But this might be a level that you would smooth out and mark. See how many times it stopped there and turned around right here? Right at the end of yesterday's session. The black are the open sessions. These are the post-market and pre-market. Not as many people trade in these. You have to have the right brokerage to be able to do that. But you can see this historical data as it went across from this day. The pre-market, it held it nice and firm. It looks like it did a bunch here. It gravitated around that level. Why would it do that? Well, that's a pattern, guys. Patterns repeat, right? That's why they're called patterns. So you're looking for something to repeat. So you'd want to make a note of it. So there's that kind of patterns. And the other kind of patterns that I was just talking about with Day Trading, Volume 2, the Candlestick Pattern Playbook, were the patterns within, that the candlesticks make themselves. There's all kinds of patterns right here, and when you learn them, they're very, very helpful. This is a tweezer move right here, so that's where they line up and go down, showing the rejections about to happen. This is a doji or a rickshaw man. I'm just trying to pull some of the ones I see. But there's all these different books that whatever book you get. See, this is what I would do for intraday historical data. I would mark that level right there because it tapped here twice, turned around abruptly, came down, tapped, turned around, then it finally did a breakthrough. And now you look at it like, well, is it going to reject or is it going to come back through again? And this is creating a channel between the older historical data and new historical data. I know I went off topic there. But yeah, the pattern books are very, very helpful. To one more way to tell you what direction the stock may go. You may be a winner. There's nothing's going to tell you exactly right. But the more things you line up, the better chance you have. So if somebody says, when it gets here, do this, then turn the channel. Don't listen to them. Because nobody really knows, and it's not that kind of pattern repeating, right? If it gets there, maybe do that. If he says that, and then look for or she says that, and then look for other reasons why to maybe do that, then that's cool. I'd listen to that person. But there's no always, no definite, no. Just remember that. And usually when you get people that are so definite that aren't like questioning themselves, they're selling something to you. They're selling a strategy, or they're selling you to get on their channel and buy their course, and they need to sound really, really confident. And they start to say, let me show you how much money I've made, and which is a weird concept in yourself. People are showing how much money they make for marketing purpose. They're marketing something to you. Look how good I am, So I just did that. In fairness, I just did that with my trader view to try to get you to come over to trade along for free with me, for free. I'm not charging. So that maybe, just maybe, you can be one of the 5% that makes money, doing this. Another way that you can do this to things that you mark is you mark trend lines, right? So let's add a button. Let's do a trend line. So now I put it up here on my tool, right? So if I click on this, if you're going to make a trend line, you'd go down to a low and, get close to it, and then you click it. And now you're dragging this trend line along, and you're looking for where did it respect it again. Well, it came down and hit it there, but that was pre-market. Open session, it hit it there, but now you start to look to yourself like, look how far away that is going to be from any of this price down here. So kind of useless unless you're in a long-term thing. Then you're getting into day trading. You're like, wow, look how it hit there, and then it rejected off that level. So this, you wouldn't have known that, right? Let's say you marked it before the day opened. So now you have something that was fairly well respected here, right? So that's not a bad level to have marked. And if we got into the intraday here, what would that have looked like? Well, it hit it a bunch of times and rejected. Then it hit it and came back up. So when you combine the trend with historical data, with candlestick, when this is historical data too, but with support and resistance, horizontal lines, and then candlestick patterns, and then indicators that help you see which way it goes, and then price flow, right? I'm going to overwhelm you. But the more things that you line up, and I go through this on almost every trade in every video in some form or another, the more you line up, the better. Trading with the crowd. See these little gray lines? That's every half and whole dollar. People instinctively get in at half and whole dollars. So that means that huge momentum of people jumping in or out helps you determine the direction of the stock. So you're going to just try to go in for like a 7-cent move or an 11-cent move. This is showing you the average of the last 9 candles. It's basically telling you what to go for. 100 shares, 7 cents, $7, right? $10 if you only go for just a little bit below at 10 cents, say, right? You do 200 shares, double that. You do more trades. I think this was 2 trades, maybe 3. I just stair-stepped up, and I did all my trades today in less than I think it was about an hour and 10 minutes when I came back to assess and trade again. Hour and 10 minutes, $307, whatever it was. So you can't expect to make it all the time. I would set my goal much lower, $25 a day, $50 a day, and then gradually work up. First, I'd trade in a simulator. But I mean, the more things you get to line up to trade with the crowd. I have moving averages here. So what are these little snakes going across the screen? That green line is showing you the 20 moving average. It registers the last 20 candles, and then it averages out, smooths out like this is where they'd end up if you averaged out the price movement of the last 20 candles, right where that ended. This gray line's the last 9 candles, right? Sometimes I'll have a 14 on here, or I'll have large day ones on here, which are going to probably confuse you. So I won't even go find them. But so that's going to help tell you too. And then you have indicators that when those cross over, they register with an arrow and they tell you, hey, this is about to go down. It's so simple, right? You don't even have to know what it means. It just says, go down. Okay, go down. So sometimes having the prop firm indicators that they train their traders with is a really good thing to have. So I would look for those and get those. And really, if you go to buy them, anything over like 25 or $50 at the very most, you're getting totally ripped off if you're paying hundreds of dollars for an indicator. On Thinkorswim, at the $1 Million Margin Club, they're all like $24.99, and the custom scanners are like $4.99. So, look around a little bit. You can get free ones too. You can find free ones. I have a lot of free ones on this channel, but the choice ones, the real, up-to-date good ones are at the $1 Million Margin Club, and other ones too, but I haven't seen anybody cheaper than the $1 Million Margin Club. So with all that data, it just becomes a no-brainer. Down here, the Scalp Pro meter. This is telling you what's happening inside the candlesticks. Let me open this up. This blue column is this candle representing this candlestick's volume, and this says how many buyers are in green and how many sellers in red, and this meter shows you how strong they are, and here's the percentage inside, and then this turns blue rather than white when the volume increases the volume of the last candle, letting you know, hey, there's a trend here. It's stronger, or at least a short, very, very short-term trend of strength, right? So I don't know if this will turn fast enough to, yeah, it's going to turn. Watch this turn blue. So this is going down, and it's telling you, it's about to tell you that it's a trend down, see? And the MACD said go down too. So basically, this trade right now said go short. Let's see if it actually goes short. This is hood, meaning going down. So it set it right here at 72, and it's already down to 69, 67. I mean, it's stalling. It's pretty slow. So you could have gone out already, but there it goes. Yeah, just like it said it would happen. So that would have been an easy $10 to $15 trade, depending on your share size. And you just take the money and run. Don't get greedy, right? Unless you really know through all your technical analysis, I believe the stock's going to go down to 117.50 right here. So I'm going to hold to there because of my due diligence and data. I'm not going to jump out like I'm scared. I'm going to hold it. But if you're not sure of that, which most traders aren't, taking those short-term scalps are better. If you want to trade longer for bigger moves, then move over to a 5-minute chart. This is just 1 minute. Every one of these represents a single minute. And I see people trade on 10-second charts. So once you start trading on a 1-minute chart, all the other charts seem so slow. It's like watching paint dry. It's just, come on, man. Make a move, man. I get that way. You'll listen to me whine a little bit like, come on, when I'm trading. But I have a lot of patience learned through life because I'm older. So sitting on the park bench, trading 1-minute candles before I start my shuffleboard game. No, it's not that bad. But I'm just saying you can learn patience, and it's a good idea because trading is boring and you want to be able to sit and wait for even these 1 minute moves to go in your direction. This is still living off the data we got. It's still pushing down. You could have made this trade several times, in and out, in and out, in and out, So that's just a little bit about technical analysis and different indicators. If you open the day chart down here, you can see I even watched the social sentiment here. This indicator is actually free over at the $1 Million Margin Club. You should go grab that one. It's telling you that there's a minimum of 100,000 volume in every 1 minute candle. It's telling you right there over a 10-day average and then over a 1-day average, right? This is another one telling your average true range split in half in the full thing. Here's the daily moving averages. I remember I pointed out the 9 and the 20. That's the 50, the 100, and the 200. When those cross over, that these are things to think about, how to foul that trade. Like when that crossed over the 100 right there, that told you on a longer term trade, go long. Look at just how it just went straight up, right? So this really gave you like 3 weeks worth of trade upward by just following that one thing. It's even stronger when it crosses the 200. And then when it crosses back, be careful. See how it's crossing back down? It's like losing confidence. And then it broke back up again. There's an entire book. All it teaches is that particular move for long-term trade. So I recommend you look around and study. And if long-term swing trades are the way to go, those are, books that cover that kind of stuff is better. But if it's a book that's selling you a course, take it with a grain of salt. If it's a book that they're just passing on their wisdom, those are the books you want to go for. And there's a lot of good ones out there. And I've linked at least 3 really good ones for you that aren't selling courses or anything. So look at those, because that's how I started. 2 of those books, well, I wouldn't say it's how I started, but I added them very, very quickly to my trading, and it helped me immensely. Those books. So check those out. Check out the indicators, but just come around, stop by, and trade for free. If you subscribe to the channel, you'll get an alert, or just remember to check. If you don't want to subscribe, just remember to check every morning. We're kind of doing a revamping where we're switching to small share size live trade rather than large share size. So a lot of people have jump ship because they only want to trade large share size. And I do that on Zoom, but I don't do that on streaming. And these are all people that are registered to trade large share size with the SEC, just because of the amount of money that it is. So maybe one day you can be one of those people, but you need to start small. People were trying that, and people were getting hurt. So learn how to scalp with me, guys, or with other people. Learn how to bring in $50, $100 a day, $200 a day. How much, if you're retired right now, how much, I definitely sound like a commercial. Get a reverse mortgage. No, but if you're retired and you and your wife are bringing in between, $3,500 to $5,500 a month, but you really need like $8,000 or $10,000 to make your nut, right? And you have money saved, but it's slowly dwindling away, like so many people, because you're making the difference between your Social Security or whatever other funds you might have. You're kind of, it's drawing on your account. You're not making enough on your investments to pay your monthly nut. There is a lot of people like that, a lot of people that didn't plan well, or the plan didn't go the way they wanted, or it's not their fault in any way, shape, or form. That's not what I'm saying. And they need to augment their income. A lot of people, more people are that way from who I've talked to out there. I mean, I was a former math teacher, but also been, I'm a trader and a quarterback, so I've been mentoring and training traders for many years, and I've come across a lot. I don't do that now, so don't email me, ask me that, but I do quarterbacking still, but for large groups. So I know for a fact that there's a lot of people that just need 2,000, 3,000, 5,000 more a month. And the $1 Million Margin Club put together this support and resistance strategy with Fibonacci levels to help you. Since I've showed you this much, let me just, in case it's the only video you watch, let me go to the Fibonacci levels. Okay, guys? All right. So the base of a strategy is, let me go to something like Apple here. Let me go to Apple. Is Apple up here? No, that was one that came up on the scanner. Let me look for Apple right here. Okay, this is marked up to the nines. I'm going to get rid of all these for you because my life is drawing lines. It's all I do every day. So those of you that already know fibs, you'll now turn off the video. But if you don't know, so this way of marking Fibonacci levels that I'm about to show you for support and resistance is not the same way a lot of people will show you how to read the different percentages on your Fibonacci levels, which people talk about as being nature's mathematical formula because of how it's repeated in everything that grows around us on our planet, you know. So a lot of people follow the Fibonacci formula all the way back from, I mean, it's about as old as you get, nature's mathematical formula. So professional traders put together that if you go to a 5-minute chart and you're just looking for support and resistance, this one's set for 10 days back, a 5-minute chart set for 10 days back, okay? Now I'm going to look for the high and the low, and the high could be up here and the low could be down here, or the low could be down here and the high could be up here. It doesn't matter, but you always mark it left to right. That's the one thing to remember. So I'm looking for the low now. It's right there. I'm going to pull it right to the edge. I happen to have this up on my tool bar already, but it's called the Fibonacci retracements. So I'm going to click on the low down here. So that's 69. So 224.69. I'm looking off to the right to see the price. There it is. Now I've got to wheel over here, a little out of position here because they're so far apart, and get to the high. And the high we saw right over here. So there it is. So that's 241.37. So a couple pennies down from right there. It's very sensitive to get to the exact. There it is. Now that is Fibonacci levels that just opened up from its formula. Look at how the price action, every candlestick, right, represents the price going up and down in a certain time increment. These are 5-minute candlesticks, and I can zoom in on them, but I just wanted to show you the broader picture of how it bounced back and forth, how you could have taken a long trade, then taken a trade and gone down, right? And then, you know, here you're kind of in the doldrums, but if you just played that the day, like maybe 2 trades, you have an amazing channel here. Happened again, channel here, then it channel hopped, channel here. It's not exactly, right? They're not exactly. Let's look what happened on today's action from way back when it kind of stopped in this channel down here. This is just the beginning of the strategy. Now then, look at how it respected it there. From way back there, I marked it. Look at that. Came to a complete stop and told you, go the other way. It's not going to tell you every time. So how did they make it even better? Well, then they do a 5-minute 2-day. Okay? Now you're going to mark more of these, but much closer time frame, right? This should just be on 2 days. It seems like it's going back further. Oh, wait a minute. I can't mark today's action. So let's pretend we don't know that today happened. Did I mark today's action on this? I don't think so, right? No. All right. So we're going to go high to low, which would be, yeah, so it would be like we'd mark here. Because I'm pretending that we marked this before the day started. So otherwise it's kind of cheating to go down to where the price actually went to. 72, there it is. Okay, so now I'm going to scan over here to where a low would be, which I think is right here. Yeah. Does it go any lower? Oh, no, it goes lower. So let's say I marked it on the pre-market, so we get a little bit different readings here. So right there. I'll make that a different color so we know this is only the 2-day. Often I'll only do the open session. Now the gray are post-market and after-market and pre-market. This is the open session where most people trade, right? So now, as you can see, I'm not editing. I'm just riffing here. So let's just see what happened here. Yeah, because the 2 days are way up here, this price action would have helped us up here, but it doesn't help us down here because this Apple dropped way down today for some reason. So normally when you're trading this strategy, if it makes a big move that's trending, you don't want to try to trade it because you're looking for a consolidating one. I thought I was going to be at a consolidating stock, but apparently not. Let me just open the 10-day to see if we have any historical data here. Hang on. Did I not go to the 10-day? I went to the 2-day again. Hang on. Here's the 10-day. Okay. All right. Let me go back here. So we're way over here. So yeah, so we do have some historical data. that is in the same price range. So it's over here. So what else is historical data besides Fibonacci levels? I think I mentioned it earlier. Where has the stock stopped and abruptly turned around? And then has it stopped in multiple places as you go across to try to smooth a level that is catching more areas where it might respect? So I would mark that level. And we definitely want to mark this. Now we're down here because we know that price action is in this area already. So I'm just marking these to see. Normally we do something like that, right? Because it catches all these. Like that's an amazing level. Probably. You don't know. But that's all historical data, is where it stopped and abruptly turned around. So you can see as we got into this day, I would have gone back and checked these levels to see how well I could respect those. Look at that, guys. Look at that. You know, I go short, boom, boom, boom. It gets close, it rejects. I go long, gets up. I go short, boom, boom, boom. I go long, it rejects. I go short probably, and I have a losing trade, but then it comes back and it makes it a winning trade. I go long. This is channel trading, ceilings and floors, a strategy put together in the original book, Day Trading Volume 1, still used today all over, and it is really the safest strategy to trade. So that's Day Trading Volume 1. This is called the RV strategy, and it's really, you need to try it because most people just stop right here and make money. But as the trading goes on in the middle of the day, you can do what we call intraday levels. Like if this kept respecting this area right here, you know, right here, that's so abrupt, I would mark that in case it came back. You can see it topped out here and then it did it again here. So if the price action was coming back today, I would make note that that's something to watch. That's all you do. You can't count on it. You can't count on it. But maybe it will do what that just did. So maybe you have something that gives you a little bit of an edge when you're using other indicators like I went over before. And I'm not going to go over every indicator here, guys, because there's a ton of them. But believe me when I tell you, prop firms use them for a reason. Prop firms train their traders with them for a reason. And they do help once you learn, but it's a little bit of an education. But you can see it's messing around on, this is the 1 minute chart. That's the 5 minute chart. So it's messing around at this level, telling you like, you might want to go long when it hits here. It turns you around with this risk oscillator, turns you around here too. It's like, hey, go long. And then you already had a move right here. It wasn't a big move because Apple's a slow stock, but, and then here it just kept bounding. You know, it broke it for a breakout, a flat bottom breakout, they might call it. And then it's and then finally broke up. And you're like, holy crap, that's a move. And then you get ready to get out because you have more historical data right here. It's like, uh-oh, get ready. And then boom, 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 boom. Look at that. Look how much money you could have made there. And all I did is I simply marked out the levels. People tend to overcomplicate this. That's all you have to do is mark out the levels, be discerning, be conservative, keep your share size small, and don't overstay your welcome. Just put green in the bank, put money in the bank. A green trade adds up to big green trades, to pouring money on top of you. Just take the baby moves and don't try to get rich quick in one day. You see these guys make $100,000 a day. I've seen guys make $200,000 in a day, you know, right here in this studio. You know, and not just a day, like in an hour, you know, so it can get you really excited, but it's a lot of years of experience, and it's not as easy as it might seem. So you want to just build up your money ever so slowly. Okay, that was my words of wisdom, guys. So that I'm not showing you the whole recap today, so please go to the live stream and you can see the trades that I took, that I gave you the total on. And thanks for tuning in on this video, and follow us for the rest of the month. Come on in and trade, or just watch it being traded. You know, it's not a waste of your time. You might really pick up on something that could be helpful for you. Okay, guys, I'll hopefully see you in the morning. All right, go green out there. Hey everybody, this is the professor with Day Trading for Success. So every morning you can see myself and a group of traders trade live for absolutely free. We're trading on Thinkorswim, and you just put on alerts, subscribe to this channel, put on alerts, and you can trade along with us if you want. Now this month what we're doing is we're doing a strategy. We're trying, basically we're teaching scalping which you may or may not want to call it a strategy, but it's a way of trading, a style of trading with scalping. And then we're really using the Day Trading Volume 1's original strategy from way back, which is called the RV strategy, where you set historical data, support and resistance levels, and then you go on from there and you look for the price action and indicators. So I'm going to break in a little bit more about what that is exactly.
Welcome to Day Trading for Success, where the professor, a former math teacher turned full-time trader and coder, guides beginners on how to trade for a living using proven strategies, breakthrough indicators, and lessons from essential trading books. The professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
So basically, this layout that's confusing you is it's a dynamic tool that pretty much guarantees me a profit every time I trade, if there's such a thing as guaranteeing. And the secret of being the 5% that makes money day trading is trading with the crowd. Wherever they're going to go, you need to know. You need to predict it ahead of time. You need to have a good probability of knowing which way the price action is going to go. And you do that in a few simple ways. So let me talk to you about how that's done basically. This chart over here in the middle of this confusing mess, if you're new, is a 5-minute chart. You can go right on here and expand it. And there's my 5-minute chart right there. Right? Now what you're looking for is you're looking for patterns in here that may repeat. But guess what? It's real easy. You don't have to figure much out because you go with historical data. And some of that, the oldest historical data, known as nature's mathematical formula, is the Fibonacci level. So you just find the low down here. So that's at 34 cents. I'm looking over to the right. I've got it clicked pretty close. I click once, I drag it over, and we go to the 44 cents, which is right there, that high. And then these levels, it's very sensitive. So I'm going to get me close, and then I'm going to go in here and I'm going to type in what we need. So we need that top to be at 44, and that's 58. So this is going to be at 44 because that's what the price range was down there. And this is at 34, not 33. And then what that does is it opens this amazing mathematical formula that's called Fibonacci retracements, and they create channels, and they basically identify the patterns, the way that the stock's you can count on they basically move. So this is a strategy is based around this Fibonacci level. It doesn't matter whether you're going high to low or low to high. You always go left to right. And then the way we trade in the morning particularly is we open, that was a 10-day back 5-minute. This is a 2-day back 5-minute chart. Now we're going to zoom in for a little closer action, looking for the high-low. So here it is down here. It's in a different spot. And it's going to give us a little bit different levels and tighten up how we can expect to trade this. I'm looking over on the right, trying to get the right price. There it is. I drag it up here. Now I look for the 44 again. That's 47. There's the 44. I'm going to make that a different color. All right. And then we're going to go into here. Now, if you want to see some of the live trading, just go under the channel, which I happen to have kind of zoomed in right here. And there's over 400 videos, right? So you can see me make 33 minutes, make $13,000. You can see freestyle trading, $300 with 50 shares in just 6 minutes. How much money you can make over a month's goal. We do a lot of challenges here. So right now we're trying to just make $150 a day. There's a lot of videos over there, but if you go to live, right, you're going to find all the live videos. Lately, I've decided to just stop doing the thumbnails, and you can rewatch those there if you want. And I do recaps with them as well. So if you want to see that, but that's basically if you want to just see what the channel's about. So now I've done 2 different Fibonacci levels here, and now we've tightened up the channels. So you're basically looking for these to repeat. And the other way you market for this strategy is you do historical data. Well, the Fibonacci levels are historical data. Let me just get back to see where they end. So here's our here's our price action today, right? You can see how well these levels were respected, kind of stayed right in between them. But we want to tighten it up, right? We want to even have a better opportunity to figure out where is that going to turn around. So you look at the previous sessions over here. Now, we don't know what's going to happen here. You go back a little further if you can, and you look for an abrupt stop and turn around of the price action. See how these candlesticks are marking the price action over here, and they're going to change with every 1 minute. Well, this is on a 5-minute chart. So every 5 minutes this changed, but see how many times it stopped right there? Now I follow it around, and you do what you call smoothing. You try to line it up to as many as you can, so you can see that's a really good level right there to create additional historical data. So just with that one level, let's see what they did. I have no idea, by the way. But, it let us know that after it broke that, it's probably going to turn around. So it tightened us up a little bit. You can see this day, it was right there. Of course, that's where I marked it. Never mind. So now we'd want to do other additional levels here. On the upswing, there's a whole bunch of markings there. And then you can see a bunch here. Let's see if we can line up multiple days together again. It turned around right here. See how many times it turned around right there? And then it picked it up right here and right here. And then you can do an abrupt turnaround there. And you could do them on the wicks, or you could do them on the bodies. You try to catch as much as you can across, because it's more likely it will repeat at those levels. So what is a pattern? A pattern is something that repeats. That's all it is, something that repeats. Now, you can learn the candlestick patterns, like in Day Trading Volume 2, the Candlestick Pattern Playbook, and you can learn what those actual patterns mean within themselves. But there's another way. You just want to see a pattern of when the price action stops at a spot and goes the other way. And how many times will it do it? Over and over. You might get lucky and you just are able to call it like clockwork every time it's going to turn around. So, these didn't create perfect channels, but they're not bad. You can see, it hit it a whole bunch of times there. So there's a channel between this fibs right in the middle, kind of made a wide channel here, lots of places. This got picked up here and turned around. They're not going to be exact, but they're going to give you an idea of like you're getting to the end of the price action. But you need more, right? You need more than just historical data. That's just the first step of how to trade this strategy. So let's go into a little bit deeper. So before I go back to the layout, I just wanted to make sure I said we want to go a bit deeper. This channel's been around a while with professional traders that make thousands and thousands of dollars doing different things. And I myself am a coder. So I code custom scripts for Thinkorswim and ThinkScript. And you can get, most of those are available. I have links to them to help you trade along. But we've also got this into different seasons. So you might want to sit down and really see how to set up a chart properly, how to use an indicator properly, how to build a layout. With lots of free layouts that you can download, and just so much information that you might want to look around a little bit, as we get into this, so you can really see. So now this is the layout that I use today, and I'll go over it with you. You don't have to have something this complicated, and if you're new, it's very complicated. But it doesn't hurt to understand. The more you understand, then the better chance you have of making money, basically. So this month's challenge is very basic. This is all we're trying to do right now, is just do like $150 a day, so that we can add up to like $3,000 maybe at the end of the month, which can help pay people's bills, and try to do that in a half hour to an hour every single morning. Monday was a holiday, but here we are. And so far we're right on track. We're a little bit ahead of track, and it doesn't come without its drama, but it's exciting to have a bunch of screens so I can drag this stuff around. But this is a 1-minute chart filled with all kinds of data that I'll talk to you about briefly. Then you have the news down here. You have a daily chart down here that has all kinds of custom things as well on it. We'll go over those briefly. This is the active trader. This is a level 2. I hide the exchanges off of here because it'll show my account when I'm trading, my account number. This is a 15-minute chart, a 5-minute chart, the time and sales, another 5-minute chart. This is the 2-day one, and this is the 10-day one I just showed you on the fibs. This is a 30-minute chart reduced, a 1-hour and a 4-hour chart, all reduced. I have those all on one layout specifically because when I stream live, I'm jumping around showing people things, and I want to make sure that I've got it at my fingertips. A lot of people will spread it around to different screens. I've learned to put it on one so I can set up the strategy, talk about, as far as the historical data, I mean, talk about the style, talk about any strategy, talk about the stocks. So that's why it's set up this way, and I'll explain about this in just a second, but I want to go on about how we find our stocks first. So this is a scanner, and I am a coder, and I actually code these scanners in too to find specific stocks. So what might I be looking for that Thinkorswim Charles Schwab wouldn't have readily available for me? Well, if you're scalping, you need to make sure, and we'll go back to the charts for a second, you need to make sure that this price action on the level 2, typically you'll see a level 1, which is just, there's the ask, there's the bid. Level 2 shows you who's waiting down the pike. And you want to see that moving in a certain way, swaling I call it. You want to see it moving 10 to 15 cents either direction every 10 to 15 seconds, 30 seconds, so that you can have 10 to 15 pennies to trade. With 100 shares, that's $10 to $15. 200 shares, that's $20 to $30. And in just a few seconds, you get that. If you have the right indicators, it even tells you your target. So you need to find a stock that's going to move that way. Now, some of them are no-brainers, but it gets a little deeper where you need to find them. So I have coded this up where a couple of things. If this doesn't move at least 50,000 in volume and liquidity per 1 minute candle, it won't come up here, right? So that's the one thing. It also shows the spread, and then it also has it that it has to move at least 15 cents in a 1 minute candle, and often you'll have it repeated. So with all those codes in here, and by the way, they're over at the $1 Million Margin Club. I make them available. I don't sell anything. They have them over there. I get paid to code, and then you guys can get them there. Only like $4 to get these custom scripts if you want them. You don't need to have them, the custom coded scanners. You don't have to have them. You're going to find a lot of these, but it makes it a lot quicker first thing in the morning. And of course, I have so many different ones that I do, like the gap and go. If you're looking for momentum ones, you don't have to pay a service. I code them for people. I make them available for like $4.99. They make them available for $4.99. I'm just saying they're not like the $200 scanners you might see or the monthly fee. There's no reason to get caught up in doing that. These are going to have everything that they try to charge you for like $4. So keep that in mind. But let's go back so there'll be a lot of them. If you watch, you'll see a lot of videos about scanners. But let's talk about this. Let's open the day one for a minute so you can see, right? So I've got the social sentiment here. I've got the ATR here, which is so important. And then this one's free over at the $1 Million Margin Club. You might want to grab that. I put this on my day chart because it's immediately telling me that this stock is worthy to trade, which of course with a Tesla is no problem at all. And then I always have my ATR down here so you can see, and then there's a custom script that gives you the half value of the ATR and then the full value. What is an ATR? Average true range. It's an acronym, ATR, average true range of a stock over a 14-day period based on Wilder's mathematical formula, smoothed out, so you can pretty much predict the range, high and low, of a stock. Now, it's going to give you the overall range down here. Like if I go over a candlestick, let's just say I hit this green candlestick, and you look down here next to this, it's going to tell you how much money that's going to move in a day, $18.30. Now, it probably isn't going to move $18.30 in one direction, right? So a strategy was developed way back when they did Day Trading Volume 1 with the $1 Million Margin Club, which is a group of professional traders. Link connected, along with a lot of other great books that I may or may not mention. That strategy put half the ATR level on your chart, meaning it'll probably go half one direction and half the other direction, not all in one direction unless it's trending. And basically, there's a couple ways there's a lot of ways to trade, but the two main ways to trade are people are like, don't fight the trend, go with the trend. So going up or going down, you're looking for a stock, figure out which bias you have and move that direction. But another way you can trade, which will always have a stock, is when they're consolidating back and forth like a slow moving snake, right? And they're going to back and forth in between their ATR. If it breaks the ATR, it is now trending, and you might want to ride that trend up or down. The problem is you never know when it's going to exactly stop. If you've created historical data with the Fibonacci levels and with the price action levels that I just drew for you a second ago, you can really predict very, very well where they're going to turn around. Never exactly, and so you need more and more help. You need crossovers. This is an average true range over 100 candles back. That's 200 candles back. That's 50 candles back. You can see the inertia as they cross over each other, but indicators were made to signal you and even give you alerts when that's happening. So you don't even need to learn how to read it anymore. Things have come a long way, and I'll show you a little bit about that right now. Let me close this day chart. Now this has the ATR levels on this big jumbled up chart, but it doesn't have the labels at the top up here, but it does have the ATR. So let's take a look if we can find them. So they'll be green, a green line. So that is your ATR overall high right there. This is your ATR. No, wait, I'm sorry. That's the market magnet. Here's your ATR overall high up there. I know a lot of line. All these little gray lines are marked every whole and half dollars. Trading with the crowd is so important. A lot of people go in whole and half dollars, so knowing where those are is very helpful, but you may not want them. So you know what? You can just get rid of them and apply, and now they're gone. And it's much less messy now. Let me zoom in. Oh, we're way back here. So I'll zoom in here. When you trade on a 1 minute chart, of course, you're not going to see all these lines, right? Because you're going to trade like that. So you're going to see that historical data. Look how well it's respected here. You're going to see those Fibonacci levels. Look how well they're respected here. You know, here too, turned it around, you know. So I was trading this just a little while ago using, and this is the VWAP, right? The volume weighted price average right there, which is technically the value of the stock at any given moment if you were to try to buy a larger share size. And then it's got a bunch of other indicators in here, but the average true range is up here. There it is. That is like a wall when you go hit it. That's half of it, and that's half of it down, and then the whole amount is there, and then the whole amount is down here. Right? These other dotted lines are something different up here. You'll learn what they are if you get those indicators. There's your 200 moving average there. It's just going to be a straight line on a 1 minute chart. On the day chart, you know, it moves, but on a 1 minute chart, keep in mind, this is in the middle of one of those days, so you just see it static looking. But so having those average true range here is going to really help traders. The other thing you have is the engine here, really, that tells you when the trade's going to go a direction. This is an advanced indicator that scalpers use. It shows inside the candle the power. I always annotate it to you're on top of a wave and you're waiting to jump on that wave as it comes, you know, as you see it, as you see the inertia coming, you jump on. See how it's the inertia was just telling you it was going down, and it went down when it saw it there. So inside of this, you can see it going up or going down, and it gives you the confidence, even the percentage, when to trade. This is called the Scalp Meter Pro. I have a link to get it if you want. If you're not going to get anything else, I would get that if you're new here. This one here was developed pretty recently, mostly for beginner traders, telling you, giving you the overall average of the last 9 candles, up or down. Red meaning down, green meaning up, and then it smooths out a target range. So if you were to get in a trade on a 1 minute candle and you're trading on a 1 minute chart, you don't want to hold that trade for more than 9 or 10 cents going up or 11 or 12 cents going down, meaning 100 shares, $9 or $10, 11 or $12 going down, or 200 shares, 500 shares. You trade with more shares, you make more money on that short target. It'll let your pennies be marked right here, and then your overall P&L right here, made for fast trading. This is going very slow right now. You can see the meter called this to go up. You could have jumped on that. You might want to see how it keeps rejecting on that historical data I drew from way back when. So you start to pick up on this stuff, and it becomes like taking candy from a baby. What a weird phrase, right? Anyway, it becomes really easy to figure things out when you have all these things to help you. If that weren't enough, you have the arrows telling you which way you're going to go. This is from the MACD, a different kind of, you can get a histogram on your chart, or you can just get the indicator that says, go that way. And then the other one that says, oh, you're done, go that way. And it's just, I laugh because it's just so simple now compared to what we used to have to go through. Now, none of these are going to be 100% accurate, but they're pretty close. So you're trying to cumulatively get as many that say the same direction, 80 to 90% of them, which they usually will agree, not always. And then you make your move. And like I said on that surfboard, you're jumping on, and then you get off before it hits the rocks. Once you learn to trade in a 1 minute, once you trade in a simulator or just trade with one share, it's like, oh gosh, I lost $5 after I traded all day because I only traded one share. You get rid of that nervousness, and you start to see that this isn't really very fast. This is pretty slow to decide when to push a button to get in or get out, right? And you see your number, your number will come up right here or right here, and you can see the price action. Like if I was going to let's just make an example here. Like let's just say I took that's 10 shares. Let's just say I did one share. Like say I'm you guys, I do one share. This says it's going down, but you have a support right there. So I could buy in off that support. Now that's 53. So I'm going to go ahead and go in. So I got that, and it dropped right when I got it, but it went down 10 cents. But it was saying that it was going down, but I bought it off the support level. So, I'm not wicked nervous. I'm like, oh my God, it went down. It went down so fast. And that's really bad if you had 100 shares, right? I mean, that really went down. That Fibonacci didn't hold it. Instead, the Meter Pro told you, and the volume increased when it changes color. That's telling you that there's more volume this candle than last candle. Strong move down. MACD, that arrow says, hey, we're going down. Why did you just go long on that, right? So I'm 13 cents down. You can see here, it marks it up here too, right? I could shrink this down so that whole thing is all the way across so I can read the whole thing. You can move this around. This is what they call on a custom grid. And I have the news down here saying, I might read like, why the heck did that just happen? There might be a news story but as you can see, you just wait a minute. What goes down must come up. What comes up must go down. You know why? We're trading a large cap, mega cap stock in Tesla that always retraces, they call it. It goes back to, not always, I should be careful with that word, but pretty often will give you the opportunity to make money no matter which way you go. But you have a max loss set, like, hey, look, I don't want to lose more than 10 cents here, on a one share, right? So if it gets that high, I'm just going to get out, right? In this case, I'm making money. So I get out. I think I made 4 cents, but I'd already made more money on that. I should have paid close attention. But, if that was, I think it was 4 cents. If that was 100 shares, it would have been $4, or 1,000 shares, it would have been $40. And I do trade that high, and I do trade on margin where I trade with the bank's money, and you can get approved for all that. So you should learn about that, and you can get offshore. Again, if you get that original book, I found it to be the best book, Day Trading Volume 1, put out many years ago. It talks to you about offshore accounts. It gives you sample, when you're opening a new account, it gives you sample applications. It literally walks you through, starting from a beginner, every step you do with no nonsense, not like 500 pages, like in 15 pages. Like every page has something that really means something. So and then it goes into the strategy that was developed by professionals that so many people trade, thousands upon thousands of people, many millionaires. So look for that book. I have a link to it. The other book would be Mark Douglas, Trading in the Zone. He's a different author, really helps you deal with the probability and outcome, lets you, and gets into your psychological makeup to deal with the risk. Another one is Best Loser Wins. That's by Tom Hogarth. That'll talk to you about never follow the crowd because 95% of the crowd is wrong. Now, he's more of a swing trader, a day trader too, but that's a swing trader philosophy, really. When you're scalping, you do want to follow the crowd because the moves are very short and everybody jumps on and literally, like, picture that if you're on a boat and everybody lean to one side, right? You lean, everybody's going the same way. You can see it. You can see they're all over there, that's where you want to be. Not really, you'll capsize, but maybe that's a bad analogy. But I mean, you can see it happening, right? In very short term before the boat's righted, then it might be righted, but I'll have to work on that analogy. But trading with the crowd is so important, and the indicators are going to call it out because inside here, these are like moving averages. That's 20 candles back, that green line. This is 9 candles back, this gray line, right? And then I took off, I used to have a 14 on here too. And then those solid lines are done based on the day trading, a day average. So you might not see those here because it's rare they come across here 1 minute. There's one, a 200. There's a 50. This blue line's a 50 moving average. So those are really important to see where they are because you see where the crowd's averaging out, and they're always going to be kind of in this snaky movement. So as you start to understand which way the arrows say and which way the meter says to go, it really becomes very easy to predict the direction for a short period of time. And everybody can be wrong. It's never going to be 100%. I'm not trying to say that, and I'm wrong all the time. I'm just letting you know that it's really as simple as the probability and outcome. And you'll watch so many videos that are cherry picking. When the price gets here, go in here. This always works. I've got a pattern. When 4 candles go this way and 3 candles go this way, then you go up 2 candles. Okay, well, that's just not going to work, guys. That's people finding stuff on a chart. Whenever you see a video like that, and I'm not bad-mouthing everybody. Everybody's got a right to make their nut, right? But whenever you see one of those videos, all you have to do is go back on a chart and see how many times that actually repeats. And you will find, if you can even find the pattern, you will find that it rarely ever repeats. Rarely ever repeats that pattern. So they're selling your course. Just look a little deeper. What are they selling you? Just click here and you too can trade like me with this amazing pattern. So, sorry, I just had to say it. You need to make a decision in the moment. You need to be your advocate. Read those books, watch those videos. It certainly doesn't hurt. I would just say, be careful buying a course. I don't sell courses, right? I'm just telling you like it is, right? But I have certainly bought those courses. I bought a whole bunch, even when I was already making a living as a trader. I just kept buying them because I was very interested in what these people were saying. And then I found out that it's all cherry picking stuff. But, it doesn't mean that it won't work sometimes. It's just the impression. You know how we are. We're so impressionable that we decide without them even saying it. Here's what they're saying. Oh my God, and we just take that journey. They actually haven't lied to you. They're just, it's like a carny, they're letting you decide. You're having a good time, but you could lose the house. So be careful. But anyway, I am an indicator driven trader. I am not a licensed financial advisor. You should seek the advice of a licensed financial advisor before you trade. And they'll probably all of them will say, don't day trade. That's what they'll say. But when you start, trade in a simulator first, and then start when you go with real money. Go very, very small share size, guys. Okay, so anyway, now let's go into some of the other indicators here. So this down here is called the market pulse. I love to have this up because this is telling me what the overall market is doing. And right now, it's not looking good. Everything's red. The Q, the SPY, the bonds. But look, it's right on the close to flipping. This is on a 15-minute chart. So that just told you how close those were to flipping. This is a 5-minute chart. It's giving you shorter data of the same thing, but right now they're lined up. This up here on this 5-minute is multi-chart alignment. So this is telling you on this Tesla stock, the 5-minute chart's going up, it's green, 15's going up, 30 minutes going up, 1 hour's going down, and 4 hours going up. That's because it's going to pick up different ones because it's very wishy-washy, up and down. What goes up must come down. What goes down must go up. Lining up the charts, because that's when people only trade sometimes in those time increments. This is the simplest simplest thing that people will not tell you on these videos. Just the simplest thing. And I always wonder, is it because they just don't know? Or do they just want to sell something they're doing? I just don't know. Some people do, but mostly you're looking for alignment with everything. It comes down to that simple alignment. The more you get aligned, read Trading in the Zone, man. It's not just my word. The more that you get aligned, the better probability you're going to have a winning trade. You go the direction of the alignment and get ready to get out because you can always still be wrong. I have these levels over here marked on vertical lines. Every one of these is a 5-minute marking here, right? So I know when it comes up here, like when it came up to that 15-minute, I know that the 5-minute people, the 10-minute people, the 15-minute people were all making a decision based on that. So what did that break? That broke up. So everybody trading those candlesticks says, we're going to go up. And they jumped in and they drove the stock up. Doesn't happen every time. Probability is, though, it will happen. Then you just align that with the meters. Like, hey, meter says it's going up. Target's higher up than down. Those three on this one. Hey, look, MACD said it's going up. It's like everything's aligned. Here it's getting weak. This has a crossover attached to it that says, hey, it's getting weak. And sure enough, you're hitting a resistance line up here. This just told you it's getting weak. This is starting to split its average. It's telling you you've hit the range. Be careful continuing. Doesn't mean it won't keep going up. It's just saying be careful. What I would do here is, I'm just going to play a little bit more of a move here for you. So I would take that and I would sell that position, right? I would sell on that. So now I'm going short, right? So there's my position at 81. Now I already could have got out for a couple bucks if I wanted to, but because things were turning around there and we hit historical data, I took a bet that I was okay and I wanted to put a little bit more on the line to show you guys. And now I'm just going to, well, it zipped down right when I went, but I made 50 cents. But I just wanted to show you, like, if that was 500 shares, I would have been up to 125 or something. And if I had just waited a second longer, I would have had more money there. So now and that's what they call a rickshaw man, a pattern. Read your pattern books, guys, for the interior patterns, not just the historical marking the ranges. I mean, this is going to tell you things like reversal sign. So we hit that, and it gave you a rickshaw, which means, again, there's a reversal sign. This is likely to go down, but it might take a beat. It might take a beat, and it might not. It might. You might be a winner, right? So anyway, this market pulse is really handy. This multi-chart alignment is now everything's aligning to go up. So you might second guess taking a short there. You're always reassessing. You're always looking. You're looking at this level 2. You're looking, unfortunately, this stock is, the level 2 is broken today. Let's go to AMD for a second. You'll see that I have like little trades on many stocks that I picked up on the scanners. Now, when I switch, everything gets all jumbled up again. But if you look at this one, I'll talk to you about level 2 for a minute here. Let me zoom in. Now, you don't have to be this good at moving these things around. As you can see, I traded AMD very recently. I trade with a lot of the staff here in the studio. I'm in a studio, and I was trading with Charlie, and we were trying to make sure she was at 150, and this is when we made it. We just needed like $4, and we made a couple trades right here. And I did intraday historical data. Like I marked where they were making what we call a flat top, seeing if they were going to have a breakout or a breakdown. And right there, I called a couple right, and she made her money. And I do what they call quarterbacking. I call the trades. So trading is really boring, and you're sitting around. But let's look at the level 2 here just briefly, guys. So this is what they call the spread between this. So this is what somebody's willing to pay, and this is what they want. So the closer that is, the less that the market maker will take from you when you make the trade. It's totally free to trade on Charles Schwab. So you can see right here, like if you were bidding, you would go across this bridge. Picture it, and there's a toll booth here before it comes down and meets to their ask price, and then they take some of that money, usually a fraction of a cent. But if there's a big spread, they can take 5, 10, 15, even a couple of bucks, depending. Some of your spreads can be $30, So you want to try to make it really tight on your spreads here. So you can, they don't get much money from you because they do not charge trading fees on Charles Schwab. There are no trading fees. Now everybody pays a small amount to the exchanges, but the market maker here, they take it off the top before you ever see it, and this is what the price is that they're going to give you, and it's usually in between. But when you press market, they're going to kind of make it go the direction they need it to go to make that full penny. It's not like the guy selling it got their money. They took it, and then they got just what they were, they got the in-between. Like these two guys get the in-between or the worst, and then they make that money. So the tighter spread means you're going to, if that makes sense to you. But I wanted to talk to you about, these are the people waiting. So once those get filled, the next one comes up the line, waiting to go up to get their chance at the auction, their chance at the bid, right? So that's always moving. So when I'm working those scanners, I want this to move 10 or 15 cents up or down in 10 or 15 seconds. When it just sits here like this, we can just sit there and watch a stock for an hour. It's like watching molasses dry and you'll make, $5. So you really need this to move up and down. And what happens is, these are the number of shares that are waiting multiplied by 100. This is a lot of information. You might want to rewind. I have tons of video with more detail about each specific thing here. But if you picture the ask and the bid moving like this, picture them making a little noise, like little ticker wheels, right? Asking bid, ask bid, ask bid. They get filled, and then it moves. Every time they get filled, and it moves. Well, when you see them stop, but you see the volume going up here, this is registering the strength of the volume. This is showing you how many, what is the liquidity, the volume inside. This is the overall day, 29 million. This isn't just a 1 minute candle. And this is how many buyers or sellers are inside the middle. A fantastic indicator here. You can see I've got it so tight here that the meter is off because I'm trying to show you this level too. But if you go over here, now the meter's on here, so it's easy to read. But now as this is coming up, if this stops dead, but you see this shoot up, but the candlestick's just sitting here, because this is only going to move if the price moves. This will move with the price. So you can get a pattern of the price by looking at the candlesticks. All the way back in the 16th century, the Japanese rice farmers were doing this with an abacus. They were reading mathematical formulas. This has been around forever, right? So the price action will design this pattern, and then you can try to see if it's only called a pattern because it repeats, right? That's a pattern. So you're looking for it to repeat. At some point, it's going to repeat. Your job is to find out when that is by using as much data as you can. And I got off topic slightly. But when this is moving, just staying here, but the volume's going up, that means that as soon as these buyers or sellers are bought up, as soon as these orders are filled, and there's like, usually you'll see a big number here when it stops on one side or the other. Remember, you're multiplying that by 100. See how it keeps stopping at the 12 at that price? You might see a 3-digit here multiplied by 100, and you see the candle going straight up, right? But it's not, I mean, you see the candles, you see the volume going straight up here, the bar, but the candle isn't moving because the price isn't moving, right? What does that mean? That means they're being absorbed. All the shares are being absorbed, but they're not gone yet. So the price can't move because there's too many at that price. And then the second they get absorbed, bam, so you want to be right there waiting. You'll see the number go down. You'll see that 1,000 go down, 800, 700, 500, 400, 300, 200. Oh, God, get ready, boom, and you're in, right? Or you're just waiting. There's a way on Thinkorswim. You can just set the price just above where you want it to go and just have it waiting in there. So there's a lot of videos on how to do this, and they have a great help button up here. And you should watch all their videos. They have a bunch, and I have tons and tons of videos about this. So the market's about to close. This is the post market over here. So everything's going to die out. But I came over to AMD just to show you. So the stocks we traded today to get to our $155, and it wasn't without this drama, was Palantir was $30. Tesla was the big one, 113. And then I think AMD, we were just there, was 12. And I think that might have been it. Yeah, I think that's all we traded today and made any money on? Yeah, because that equaled that amount of money. But remember, I went to the scanner and I looked up various stocks to see what would work, and then I used these custom indicators and historical data. And there's another book called Day Trading Volume 2, which is, Day Trading Volume 4, which is has a bunch of breakout strategies, and they tell you when the price gets to a certain time increment level. Like this is a 30-minute chart. See here? So before the market opens, actually, what you do is you mark the open and the close of the last 30-minute chart. So if I just click here, and I click here, and then I drag this over, I don't have the chart open up, but say I drag that over, I would mark what they call a breakout. If it went below, you'd go short. If it goes above, you go long. See how well that worked? It went above, it went long. It told you. That's the 30-minute pre-market breakout. There's another breakout, and there's a book that shows you all those. I think it's this one. Is that going to open up for me? Yeah. This has them. Breakout 1 and 2. I don't know if 3 or 4 is on here. No. That's taking me to I have a desktop icons here, but this has a bunch of different ones. So that's in Day Trading Volume 4. And people wait around for those to break out, guys. I'm going a little bit into some analysis here to help you out if this is the only video you ever watch. So they'll also do a 5-minute breakout on the open session, the first open session breakout. So let's get into the 5-minute here. So here's your first 5-minute after the market opened. I remember marking this earlier because they ran into each other. So you can mark the high. Now I took to doing this rather than just a solid line and I'll tell you why. Because of all these pro traders came up with the most fantastic way to trade breakouts. They learned that you trade the breakout up, but if it comes back into the range, you never trade inside the high and low. But if it broke down low, then you'd go short. Then you wait for it to break high, you would have had a winning trade. All right? When it goes back in, don't mess with it. When it breaks out high, you have a winning trade. When it goes back in, don't mess with it. When it breaks out, you have a winning trade. It's like, they say it's like printing money, right? So that's your 5-minute, and you can see if you were trading on a 5-minute chart, you could have so easily called these trades. Another indicator down here is, this is the ADX, and this shows you the trends, and the cloud shows you the strengths of the trends. This is clearly trending up, and then it's going to show you the power of how strong it is. So these are all custom. This is a custom one. I also marked the close on this just in case it came down yesterday's close. But I mean, this is just some ideas, guys. If you can, there's more in-depth videos on this channel. I hope you do watch that. I do get a small income from the channels. I have links to affiliates that I believe in, only that I believe in, authors that I believe in, and then the $1 Million Margin Club has all the custom scripts. And since I'm a coder, I really believe in those only if they work. So what you're really trying to do is to basically see learn these things, practice in a sim first, and then trade with like one share live until your hands stop shaking, and then you can build them up. I have a video out there called Trading with Nerves of Steel. You should watch that. So I'm not going to attach on the whole live stream for today, but if you want to, because this video would be so long, but if you want to see every trade, just go to the live trades. And you can see the live trades today, and we have a fairly large group that trades every morning, and I hope I see you there, guys, because I think that with a little bit of practice, you can make a living day trading. So the bell's about to go off. Let's listen to it. The market's going to close. A few seconds here. And there it goes. Market closed. Does that feel like you're in the room? Like you got some cool trading? Anyway, guys, thanks for watching. I hope I see you in the mornings. I was starting to say this channel is dedicated to trying to help you make $100 a day, $200 a day, $500 a day, right? Make a living. You make a living. You let me know. We've got quite a few millionaires that have already let me know over the years. Many, many people making a living. That right there floats my boat. Wow, did you see that? That's an algorithmic trade. Did you see that spike? Look at that. Now, was anybody able to catch that? Probably not. You know, the market's already closed, but it showed it in open session. So they do these share drops. And I have my layout set up very sensitively so they pick them up. We call that a shadow wick. And most people might not have even seen that on their chart. It depends. I have a video about how to speed up your layout, speed up your chart. I mean, all kinds of videos, guys. You should check them out. Okay, guys, thanks for watching, and go green out there. I'll see you soon.